Hi everybody, it's Kelly Wilson from the Wilson team. Happy Thanksgiving to everybody. Just wanted to send out a quick video to let you know, or for those who haven't heard already, about the big mortgage rule changes that were sort of dropped on us last week. And we've been working like crazy for the past few days trying to get in touch with all of our pre-approved clients or anybody that might be looking at trying to purchase a home within even the next year to maybe light a bit of a fire underneath to try to make sure that it's not going to affect how you borrow and how much you can qualify for going forward. So essentially they didn't give us a lot of time to get in touch with everybody, but going forward as of October 17th, when the new mortgage rules will take into effect, borrowers will now have to start qualifying at a much higher interest rate. So the benchmark posted rate. So the benchmark posted rate set by the Bank of Canada is currently sitting at 4.64%. Now that is not the rate that you will be paying. The rate that you will be paying will be based on the contract rate. So what the best rates in the market are. So currently sitting between 2.19% for 5 years and 2.49% for 5 years. Which is crazy. My first mortgage was 8.3%. So being in Ottawa, I think that it's never been a better time to purchase. We've been in a balanced market for a while now. We don't have crazy inflation such as Vancouver and Toronto, which has certainly sparked this mortgage rule change to come into effect very quickly. Put that with the low mortgage rates, and I think it's a perfect time to be buying in Ottawa. So essentially how the stress test will work is anybody who's putting a minimum of 5% down, but less than 20% down, that has to be insured through CMHC, Genworth, or Canada Guarantee, which everybody putting less than 20% down has to go through. And essentially that is the bank's insurance. So if you default on the loan, the bank has their loan covered. So if you're going through CMHC, then you have to act as if you're paying 4.64% on the mortgage rate, even though the rate's going to be a lot lower for what you signed for. What that does in terms of borrowing is it reduces your purchase price or mortgage amount by about 25%. So we've done a few scenarios already this week where somebody was trying to purchase around the 280, 290, and it was reduced down to 225 purchase price. Again, if you're looking around 500,000, the stress test will now reduce it to approximately 400,000. So it is a big change, but I do want everybody to remember that this is not something that is brand new. The stress test was implemented a few years ago for anything that was not a 5-year fixed term. So if anybody was looking to get a 1-year term to 4-year fixed term, they had to undergo the posted rate stress test. If you were looking at a variable rate, you had to undergo the stress test rate as well. So essentially what is going forward or new is that anything that's 5-year fixed or longer, so all mortgage terms, fixed or variable, now have to qualify at the benchmark rate of 4.64%. So if you're thinking about it, like I said, give us a call, 613-695-9250. I do know that there's been some further talk and conversation about how this will affect the non-bank lenders, because they do insure all of their mortgages, whether it's high ratio or low ratio, meaning that you have more than 20% down. We're looking at how it's going to affect refinances and how it's going to affect rentals. But do stay tuned, because there's been a lot of action in the last week, and we're still unclear how this is going to take effect. They're still having meetings, etc. So I just want to make sure that everybody knows where they stand. So give us a call, and we'll talk to you soon. Thanks. Bye. Stay tuned.